All right, so if you're a Georgia resident with a 403b, you've spent years, probably decades, working hard for your retirement savings. But do you actually have a clear plan for how to access that money? In the next few minutes, we're going to build a really practical guide for 2025 so you can navigate your retirement with total confidence.
So if you're a teacher, a healthcare professional, or you work for a nonprofit, then you are in exactly the right place. This explainer is for you. These 403b plans are, the bedrock of your retirement, so understanding them inside and out is absolutely key.
You've spent your career contributing, building this nest egg for your future. And I want you to remember, this isn't just a savings account, it is a seriously powerful tool. Our goal today is just to make sure you know exactly how to use it when the time finally comes.
But let's be honest, the regulations around withdrawals can feel incredibly complex, kind of like you're trying to navigate a maze in the dark. So think of this explainer as your map. Maybe your flashlight too. We're going to make it simple.
Okay, our first stop is the most important one, your retirement roadmap, and it's all marked by a few key ages. Trust me, getting these dates right is absolutely crucial for avoiding some pretty painful, unnecessary costs.
10%. This is the number to remember. Why? Because it's the number we are trying to avoid at all costs. The IRS can hit you with this 10% early withdrawal penalty right on top of your regular income tax if you take money out too soon. So let's figure out how to steer clear of it.
Here is the big picture. There are 3 critical ages you need to circle on your calendar: 55, 59.5, and 73. Each one of these unlocks a totally different rule or a new requirement for your 403b.
So let's zoom in on that first milestone, age 55. This is a special rule that honestly a lot of people don't even know about, but it can be a real game changer if you're thinking about retiring a little bit early. So here's the deal, and this is the crucial part. If you separate from service, that's just fancy talk for leaving your job, in or after the year you turn 55, you can start taking money from that specific employer's 403b without that nasty 10% penalty.
Let's put these two rules side by side, because the difference is critical. The age 55 rule is tied to you leaving your job, and it only applies to that most recent plan. The age 59.5 rule, on the other hand, well, that one's much more universal.
Okay, let's talk about the age that most people think of when they think about retirement access, 59.5. This is the big one, It's the standard age for penalty-free withdrawals.
The moment you hit 59.5, the game totally changes. You can generally start taking withdrawals from any of your 403b accounts, whether it's from a past job or your current one, without worrying about that 10% penalty. You're no longer tied to your employment status.
Now, we're going to jump way ahead to age 73, and this is where the rules completely flip. The question is no longer, can I take money out? Instead, it becomes, how much do I have to take out?
This is what's known as a required minimum distribution, or an RMD for short. It's basically the IRS saying, hey, you've had this tax-deferred growth long enough, it's time to start taking some out so we can finally collect taxes on that money.
And you do not want to miss this deadline. The penalty for failing to take your RMD is steep. We're talking a whopping 25% of the amount you were supposed to withdraw. That is a very, very costly mistake you want to avoid.
So we have our main roadmap, but what about the detours? The side roads? There are a few special exceptions that can let you access your funds outside of those standard age rules.
Some plans allow for what are called hardship withdrawals. These are for very specific immediate financial needs, like huge medical bills or buying your first home. But you got to be careful. While this gets you your money, it doesn't get you out of paying taxes. These withdrawals are still taxed as income, and yep, that 10% penalty can still apply if you're under 59.5.
Now, for those who might need an early study income stream, there's a complex but really powerful option called the 72T rule. It lets you get a series of substantially equal periodic payments without that 10% penalty. The catch? It's a big one. You have to stick to a super strict payment schedule that the IRS calculates, and you can't change it for at least 5 years or until you hit 59.5, whichever is longer. This is definitely one to talk over with a financial pro.
Okay, now for the best part, what I like to call the hometown advantage. Being a Georgia resident gives you a significant leg up when it comes to the taxes on your retirement income. This is the good stuff.
So your 403b withdrawals are subject to Georgia's 5.19% state income tax. But here's the great news.
There's this fantastic benefit that kicks in once you turn 62. It's a powerful tax exclusion designed just for Georgia retirees.
So how powerful is it? Well, if you're 62 or older, Georgia lets you exclude up to $65,000 of your retirement income from state taxes every single year. That is a huge potential saving.
And, believe it or not, it gets even better if you're a married couple. Together, you can exclude up to $130,000 of your retirement income annually. This is a massive piece of financial planning information for anyone retiring here in Georgia.
Whew, we've covered a lot of ground, right? So let's bring it all together. Let's create a clear, simple action plan you can use as you look ahead to 2025 and beyond.
So what's your action plan? Think of it like a cheat sheet. First, know your key ages like the back of your hand: 55, 59 and a half, 73. Second, make it your #1 priority to avoid those costly 10% and 25% penalties. Third, once you hit 62, make sure you take advantage of Georgia's incredible tax exclusion. And finally, just be aware that those special options exist if you find yourself in a real bind.
And that brings us to our destination. You've got the roadmap now, you have the core knowledge to make some really smart decisions. So the only question left is this: is your personal withdrawal strategy ready for 2025?